Hey everyone, this is Tim Eng, the homesteading agent. Thank you so much for joining me on this very special episode of the Call to Farms podcast. This episode is especially important to me because it's about the infinite banking concept that I was introduced to over a decade ago when I read the book Becoming Your Own Banker by R. Nelson Nash. If you haven't read it, be sure to click the link below and get yourself a copy. You won't regret it. This idea, this concept stayed with me. I was truly fascinated with it. It made perfect sense, but I didn't have someone in my life who truly modeled what this concept actually looks like when put into practice with integrity, clarity, and real world execution. This all changed when I met Kurt Berry with Stillwater Financial. I trust Kurt. I actually do business with him and I purchased our family's policies with him because he is transparent, patient, and exceptionally good at explaining complex financial concepts in a way that actually makes sense. There is no smoke and mirrors and no confusion about how things work. Money is one of the most sensitive topics people deal with on an everyday basis. Most of us were never taught how finances actually work growing up, especially those of us like myself who went through public schools. Yet financial literacy is one of the most critical skills required to survive and thrive in today's world. I see firsthand how much tension and uncertainty surrounds money when I work with couples and partners in real estate transactions. Trust is fragile when it comes to finances, and with good reason. My mission goes beyond helping families find and finance properties. It's also about helping them secure what they are building. To truly secure your home or homestead, you need financial strength. And to maintain and keep property long term, you need financial preparedness and resilience. This episode is for anyone who is ready to take the next step in their financial journey. And if you're a bit of a nerd like me, you're going to find this concept fascinating. The idea of becoming your own banker can almost sound too good to be true, creating a parallel financial system that gives you more control, especially when the existing system feels increasingly broken. This conversation is about taking ownership of your own finances and reducing dependence on traditional banks by understanding how money can actually work for you. It's all about cash flow. I know you will enjoy this episode. And if you've read the book or listened to today's episode and find yourself with more questions, Kurt and I will be hosting a live workshop to answer any questions that you have. Just click the link below to register for our very next one. It's all free. Our goal is to educate and to answer any questions you may have because I feel strongly that this information is so vitally important for your family that it can change the trajectory of your future generations and will be a key component in building that legacy of wealth for your family. Be sure to click the link below for the latest workshop and on to our episode.
Our job is to help bring clarity to people. That's not here to sell people stuff. The reality is this is a concept that's available for anybody who wants to use it. The wealthiest families in the United States have been using it for generations. Banks own billions of dollars of it, so it can't be bad. It's just a matter of how do you use the concept. It has nothing to do with life insurance. It has to do with a process of how you flow your cash through a system. Do you own the system or does somebody else own the system? That's the question.
I love that. In fact, I read this in that book, Becoming Your Own Banker, over 10 years ago. And I love the concept, but I couldn't see how we could put this into practice. I'm so glad that you're on this episode with us and that you're sharing your knowledge with our audience. I'm really excited about it. I know the topic may seem a little bit dry, but anything that has to do with homestead security, I'm all about it, especially securing your financial assets and your home. And Kurt, you are my financial coach. You're my friend. I want you to just introduce yourself so that those who may not know you will know a little bit more about your qualification, your experience, and what we're going to be talking about this evening.
All right. Thanks, Tim. My name's Kurt Berry. I have a company called Stillwater Financial. I've been in the financial and insurance business for a little over 24 years now. So I've gained a few extra gray hairs, which is supposedly knowledge. So hopefully that'll all work. I've owned whole life insurance for 16 years. I did not use it to do infinite banking at the beginning. I didn't know what infinite banking was, but over the last 8 or 9 years, I've really learned the concept and put it into practice. And it's really made an impact in our lives. And so we're just sharing it with the people that are interested in learning more.
And we're blessed to have you here to share about it. Before we talk about infinite banking, let's just address the issue head on about whole life insurance and about a lot of the different naysayers that are online, the influencers that are spreading information which may not be correct because they're not qualified to be talking about this. Let's talk about some of the stereotypes. Let's start with the first one. Whole life insurance is just for rich people.
Whole life insurance can be utilized for as little as $100 a month. Now, you have to consider it as a savings tool. So, the more you save into it, the more it's going to build. A traditional bank will allow you to put $100 in and borrow $10,000 because they create money out of thin air. That's how inflation exists. Banks print fake money, and that's how inflation comes. So, the life insurance company won't allow that to happen. You can only utilize the money that you put in, but you don't have to be super wealthy to make that happen. We can start wherever you are. Now, the more you put in, the faster it grows and the more options you have sooner, but you've got to store your money somewhere. You might as well store it in an entity where you have control of it.
And what's the difference between whole life and term life insurance, and why term life may be a better fit for some and why whole life may be a better fit for others?
That can get pretty technical, but the basic answer would be think about term insurance as like renting a house. So you go in, you sign a lease. The lease is good for a certain amount of time, the 12 months. You pay your rent payments, and at the end of the 12 months, the landlord doesn't have to release to you if they don't want to. If you were a bad tenant, they're going to say, sorry, not going to renew that lease. Term insurance works the same as you sign up for a certain term or period of time, and maybe it's 5 years, 10 years, 20 years, 30 years. At the end of that term, maybe you're not healthy enough to get another policy. So the term ends, you stop paying, just like you stop paying rent, but you also no longer have a place to live or you no longer have a death benefit. So term is like renting property. Life insurance is more like buying a piece of property. I'm making a payment, like my mortgage payment, and part of that payment goes to building the equity of my home, and part of that goes to pay interest. When my life insurance policy, part of my payment goes to build equity, the cash value in my policy, and part of it goes to pay for the death benefit that I'm going to get in addition to the cash value. So whole life insurance is really just buying a piece of real estate, except it has some amazing advantages because I never get termites. I don't have to mess with the toilets. There's a lot of really great things about it. And I also get paid to store my equity in my life insurance policy where I don't get paid to store equity in my home.
We're going to dive deeper into that about whole life insurance, but I definitely want to address some of these other misconceptions that people may have about life insurance. Okay, Kurt, what about for those people that say, I don't need life insurance? I'm 20 years old, 30 years old. Why should I be preparing about when I'm going to die? I'm not even married yet.
So the question is, do you need it or do you want it? That's the real question, right? Do we think about most of the things that we need, or do we really think about things we want? What do I really want? If I know that I can use a tool all my life that's going to constantly get bigger and bigger, the more that I use it, it has no tax consequences. I can utilize it all throughout my life. It's liquid. I have control over it. Do I want to use a tool like that? I don't need it, but I want to use it. So I think that's really the big idea. I've done some elaborate study, and if you don't pass away before age 65, you will pass away after age 60. I found that to be 100% accurate. We all are going to graduate this life. We just don't know when. So if we know it's going to happen, then why not have something that will pay to my beneficiaries, whether my children, my grandchildren, my charities, whatever I want it to go? Why not build that into my planning where I can do it early, where the cost will be much smaller and I can let it build over my lifetime? Or I can wait till later, but it takes more dollars to make it work.
I love this because this is why I'm talking more about life insurance with my clients. Not only do Sophie and I help find and finance homes for our clients, we really care about them. We become lifelong friends. You can probably follow on social media. We keep in contact with them, and we want to make sure that they secure their assets. And a great way of protecting their assets is through life insurance. And you hit on a couple of key words there about liquidity of life insurance. Can you talk a little bit about that?
Yeah. So when you put money in a life insurance policy, once the money goes in, it takes about 10 to 30 days before you can get access to it again. So it's not like going to a typical bank, but the money is available. Once you've set it in, then you can turn around and access it however you want to, up to the amount that you've put in. So it's really as simple as that. Just know that there's always a wait to get it. This is not where you keep your money that you need for an emergency tomorrow. This is a place where you store it for your bigger picture things that you're going to do, like real estate, like college, like replacing vehicles, like taking vacations, like investing, those kinds of tools.
Okay, you've talked a little bit about investing. Now, there are naysayers out there that say, why would I want to spend money on paying my whole life premiums when I can invest it in the stock market?
The reality is whole life insurance is called called an and asset. It's not an or asset, right? All we've ever been familiar with are or assets. I can put money in my savings account, or I can put it in an investment account. I can put money and use it to pay for groceries, or I can use it to fill up my car with gas, right? Always or. Well, life insurance, specifically whole life insurance, is an and asset. I can put money in my life insurance policy and I can borrow against it to go put it in my investment or to pay for a vacation or to put gas in my car. Why not do both rather than just one or the other?
I like that too because it's making your money work twice. We ran into you the very first time we met at the Homestead Festival at Rory Feek back in
That's right.
2023, I think 2 years ago.
Yeah.
We were actually listening to Ann Briggs, Ann of All Trades, if you're familiar with her. And my mom was sitting next to you and Kim and was yapping away. We find out that we only live about an hour away from each other. You and your wife, Kim, have a homestead together. How did you begin that journey? Have you always farmed? Tell us a little bit about your story.
I am a city boy through and through. I grew up on an extremely busy street with hardly much of a yard and had a 13-story high rise across the street and a 3-story high rise next to our house. My dad was a hairstylist, and that was most of his clients right there. I would help the little old ladies walk across the street. I grew up in the city and I really had nothing to do with farm. I have an uncle who's a farmer and he had 300 acres, had hogs, corn, and soybean. And we would go visit him once or twice a year. I hated it pretty much all the time, but that's where we would go. They'd always have these really cool toys and they were always broken every time I got there. So just put a bad taste in my mouth. But I married a wonderful lady named Kim and she grew up in the country and always loved gardening and being outside. A few years ago, there was a lot of scares in the economy and those kinds of things. And so we thought maybe it would make sense to get out of the city and get into the countryside. So we found a place when we moved to Tennessee and decided to put our hand at it. Now, I'll be honest, I really don't do a whole lot with it. Kim does most of the hard work. I just help hold things. I do some of the manual labor, the heavy stuff, bring the money in, and Kim does most of the hard
Yeah.
work.
Your property is one of the most beautiful put together homesteads that we've visited, from the greenhouse to the garden area. Everything just seems so perfectly maintained.
And you guys host Sukkot too each year. So it's pretty amazing.
Again, all the credit goes to Kim. I help out very little, to be honest.
Were you already in financing before you had started the farm or started homesteading?
Yeah, we moved to Tennessee about 6 years ago because I semi-retired. And it's all really about building passive cash flow that you don't have to work for. That's really the journey. There's only two ways to make money. There's either people working or money working. Which one are you doing? For most people, they don't have any money working for them, so they have to have one job or many times two jobs in the family to make enough money to pay all the bills. And since costs continue to go up because of the government printing extra money and causing inflation, you have to have more and more dollars since they all lose value each year. So if you've got a choice, either I go work or I start making my money work, we should figure out how to start making our money work for us. The goal is just get enough. You don't have to have millions of dollars. You just have to have enough passive income to pay your monthly expenses. And some people have a lot of monthly expenses and some people have a little. And if you just need $3,000 a month to pay all your bills, we just need to create $3,000 a month of passive income and you're in essence financially free.
I love that we're talking about finances. This is a topic that is super important, but we were never taught this in schools. And if we grew up and our parents didn't do well with handling or budgeting money, then we inherited those issues and just brought it along with us. You said a lot of things here talking about making money work for you. What does that mean broken down in layman's terms? I know for us, we wanted to train our children, so we have them playing the cash flow game. And secretly, I'm doing it because I'm also learning it on the side as well. If you can talk a little bit about that for people who are just listening, if they're thinking, hey, I only make X amount of dollars, I don't have a lot of passive income. Those are for the wealthy people. I'm just going to give a little secret. Those in the game that had the professions that were more of what we consider the blue collar professions, they were able to exit the rat race a lot faster than those who were in the doctor, the engineer professions that we've been trained in society to think those who got more education and got these degrees and make a higher salary should be able to exit the rat race. But in the board game, it shows and it proves that's not the case.
Not always the case.
It's something that Nelson Nash describes in his book, Becoming Your Own Banker. And if you don't have a copy of that, you should get one. It's a great opportunity for you to grow and learn. But in the book, Nelson describes a concept called Parkinson's Parkinson's law. It's one of the human factors that holds people back from moving ahead. Parkinson's law has a couple different premises, but one of them is that our expenses rise to equal our income. So it doesn't matter whether you make a lot or a little, we raise our expenses to equal whatever that amount is. When you get a raise or get a bonus, we all of a sudden discover we have more needs, right? So our expenses rise to equal our new income. So there's never really enough. Nelson described that in order to be successful, you just have to have discipline. Not everyone will be successful because not everyone can have the discipline to set aside money instead of spending it, because spending is easy and saving is hard. So you just have to have that discipline to do. But if you're willing to do that, if you're willing to set aside something, a lot of folks will just have to reevaluate what they're doing with their money. Do you really have to have the latest, greatest cell phone that costs $150 a month, or could you get by with something less for a little while? Do you really have to pay $200 a month for cable television to watch all the shows that are all repeats anyway? Or could you do something different with that money? Could you cut back on eating out for just a little while? Could you cut back, and could you sell the third vehicle? Could you on and on? There's all kinds of things you can do. If the question is, what is your desire? Nelson describes that if you don't have the desire to get ahead, you'll never have the desire to change. If you don't have the desire to change, then it is what it is. You are the sum of the decisions you've made over the last 5 years. If you don't like where you are, then you have to change the decisions you're making in order to have a different outcome. I think that's called the definition of insanity, right?
That's right.
Doing the same thing over and
Right.
expecting a different result.
I absolutely love that you're talking about this right now, about prioritizing where we're going to be spending our money or how we're going to save money. In fact, Sophie and I just got done doing our 2026 planning, which involved looking back at 2025. And at first I said, why are we wasting our time looking backwards? Let's just continue looking forwards. But you had a great point. You said, let's look back and see what were the wins, what were the challenges, so that we can identify what those wins were and we can double down in 2026. And as you mentioned, Kurt, if we don't like where we're at right now financially, what changes can we make? Because they're not going to be instantaneous. It's like a big shift. We got to like slowly start turning it. So what things can we implement? And that's why this episode is very timely. If you're starting 2026, we highly recommend that you take a look at what you want to plan. What are your goals, your financial goals for this coming year? And this is a great tactic. And I think we should talk a little bit more about becoming your own banker. So Kurt, if you could just sum it up to someone who doesn't know anything about or never heard of infinite banking concept, what is it exactly?
The infinite banking concept is a process of how to flow money through a system that you own instead of not owning. All of us earn income. We all do it different ways. Some of us have W-2 jobs, and some of us are business owners, and some of us are combinations of those kinds of things. We have side hustles and all kinds of opportunities. We bring money in because we've got to pay bills. Think about how much money did you earn this year? Think of that number. It's probably a fairly big number for a lot of folks. How much of that could you get access to right now and write a check to someone? For most people, the answer is very little to none. We then have to ask the question, why is that? Let's just say somebody earned 100,000 or 200,000 a year, right? Just as easy numbers. And then we would say, well, I couldn't write a check for more than $5,000. Where did all the money go? It got spent on the things that you wanted and needed. Is that just going to happen this month? Or was it just last year? Or is that going to happen again? Think about all the money you're going to earn over your lifetime. It's millions of dollars. And yet you will never be able to put it to work. Infinite banking teaches us the process to first take our money and store it someplace where it will now grow and start to earn passive income, right? And then we have the ability to go borrow against it to go do the things we were going to do anyway. So normally money gets automatically deposited into a traditional bank, right? Direct deposit. They make it very easy for us. I wonder why they do that. Must make a lot of money doing that. So banks make millions and billions of dollars every single year by just flowing money. That's all they do. They don't produce anything. They don't make anything. They don't add to the GDP. They just flow money, our money, and make lots and lots of money off of it. We just want to learn to do the same thing, but we're going to do it at the you and me level, as Nelson would say, so that we get the benefit of doing that money flow. That's really all infinite banking is learning how to flow money through a system that you own and control. We like to use whole life insurance. You could technically use a tin can if you wanted to, because it's just a process. Tin cans don't pay very much, so that's why we like life insurance better.
Yeah, I absolutely love this concept. In fact, I would say a great majority of our audience would love this concept because they have a healthy distrust of the government. And we're looking for ways of how we can exit the system, whether it's homesteading and growing your own food or exiting the financial banking system, becoming your own banker.
And this is interesting coming from us who not only do we do real estate, we do mortgage lending as well. But we always like to advise our clients, and the way that we leverage the bank is to leverage debt. If you need to get a mortgage to go ahead and grab that piece of land, buy your home, get your homestead going, fantastic. But there are other strategies that you can use today that will help you pay down your mortgage faster, or leverage life insurance, for example, to be able to secure your dreams. There are so many avenues to do that. Mortgage lending is one way. There's also ways that we have talked with Kurt, and what we have planned for the rest of the year is talking through how we can leverage a HELOC, which is a home equity line of credit, which is after you own your home, you built up equity in your home, and how to take out the equity that you've earned in that home so that you can make it work for you, whether that's through investments or paying down debt. There are a multitude of ways, and this all ties under security, and that's security for your homestead. Whether you live in a condo, a townhome, a single family home, a residence, suburbia, or on your homestead, there are so many ways for you to just get smart on the options out there. And I know that it can be a very intimidating topic. In fact, when Tim talked to me about this concept of becoming your own banker years ago, I was very hesitant. I did open up a policy, in full disclosure, several years ago with a good trusted friend of Tim's from West Point. We made it work, but I was very hesitant to actually dive into it until Kurt and our family got about a 4-hour working session where I was able to ask all of our questions. And then at the end of it, I realized that this is such a disservice to not have this information out for everybody. So it was actually us that asked Kurt, can you hop on a podcast and a webinar to share this knowledge with so many other people? Because we've been hitting our heads trying to figure out how this works for us, because it is truly intimidating when you don't have all of the knowledge and all the facts, and you hear different things from so many different people that you think are trusted advisors as well. But to be frank, I don't think that a lot of folks who are showing up on Instagram and TikTok are leveraging it. We've got not just the influencers, but we have the financial entertainers who are telling us that using whole life insurance is not what they recommend. On the flip side, they're using it for their own investments.
Yeah, I had a recent client who reached out to me and I'm helping her look for property. But before that, she wants to make sure that all of her financial assets are in good order. Her and her husband are both retiring. And they said, Tim, can you recommend someone that we can talk to that can go over our personal finances? She immediately said, like a CFP or someone who will have their best interests at heart, because unfortunately, the financial industry has been tainted, much like in the real estate industry, by a lot of bad actors, of people who pretend and act like they know what they're doing. But at the end of the day, they're all transactional and they always want what's best for themselves, not for their clients. And I immediately thought about Kurt. Kurt is very transparent and he operates with full integrity. And back to what you're talking about, Sophie, one of the famous quotes on one of my favorite movies is, you must unlearn what you have learned. And everything that we were taught about finances growing up, a lot of it is wrong. Much like when we were going down the path of nourishing foods, the food pyramid should be upside down. So, Sophie, when you talk to a new client about pre-qualifying them for a loan, natural tendency for most people when they want to qualify for a home is to pay off all the debt, to pay off all the credit cards. And that's one thing that you tell them, whoa, hold on. We need to see how much are you actually paying monthly for credit card debt? Because if the goal is to get down payment and to qualify to purchase a home, which for most people is going to be your single greatest asset that's going to appreciate with equity, then you may need to hold back on paying off all credit card debt. And for most people, that's not what they would naturally tend to do.
And this goes back to the point of cash flow. As a mortgage lender, looking at the debt to income ratio, I'm looking at how much income is coming in through your multiple avenues. And then I'm also looking at how much debt is coming out. And if I'm I'm doing a debt consolidation, a cash out refinance, or a HELOC, and any of my clients for the last, I'd say 2 months, the majority of my refinances and my deals been all about debt consolidation, which gives me a pulse on what I think is really going on in the economy. And that will be our housing market update coming up soon. But all that to say, our clients will come in and say, I want to pay it all off. And there's a strategy to that because you don't have to pay it all off, or you need to know which ones to prioritize to pay off first. And so I know we have more webinars planned with Kurt because Kurt has an added layer of strategy with that and using whole life insurance as well. So I'm really excited. I think this is great for us to get smart on. Selfishly, these are the conversations that I want more of in our own lives and how we can get smarter with how we manage our finances. So we're grateful for Kurt for being an advisor for us, but also because we have the platform that we do, we wanted to make this knowledge and information available for all of you so that you can start planning for a smarter and better 2026. Thank you so much, Kurt, for being with us here today. I know we could talk for hours, and I think that we will with our upcoming webinars and podcasts. But for now, if any of our listeners would like to find more information about you and what you do, what's the best way?
Just send me an email at kurt@stillwaterfinancial.net. That's STILL, stillwaterfinancial.net. That's probably the easiest way to get a hold of me. The other thing is you can also go to the Nelson Nash Institute. Their website is infinitebanking.org.
And be sure to get your copy of our Nelson Nash's book, Becoming Your Own Banker. We're going to have a link below so that you can have easy access to it. Thank you so much for tuning in and being an avid listener to our Call to Farms podcast. Until then, we hope that your 2026 is going to be financially healthy. And be sure to join us on our upcoming live workshops with Kurt.
Thank you so much. Until next time, stay healthy.